Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Globalstar.
If you find our talks useful, please consider subscribe, like, and comment underneath. Because today, well, we are looking at a situation that is honestly nothing short of explosive.
Oh, absolutely.
I mean, we are tracking a telecom company that just violently broke out to an 18-year high. And the sheer momentum of this move is being driven by this absolute showdown between two of the world's biggest tech behemoths, which are Apple and Amazon.
Right. It is rapidly becoming the defining battle of the current satellite wars. And what makes this incredibly compelling for, anyone managing a portfolio right now is that we are not looking at a traditional tech stock rallying on like a surprise earnings beat or something.
Yeah, no new iPhone launch here.
Exactly. It's not a consumer product launch. We are looking at a high-stakes, event-driven merger and acquisition arbitrage play.
Okay, so looking at this chart, before we even touch the massive $9 billion acquisition rumor that's circulating right now, I really feel like we need to understand how we actually got here.
Yeah, the backstory is crucial.
Right, because historically, the satellite telecom sector has been an absolute graveyard for investor capital. I mean, you go back to the 1990s with companies like Iridium, and the traditional playbook has just always been the exact same.
Oh, yeah, it's a brutal sector.
You take on this crushing mountain of debt, you spend billions of dollars strapping very delicate technology to rockets, right? And then you just desperately try to sign up enough monthly subscribers to, well, just to pay off the interest before those satellites become obsolete space junk.
It's basically a race against time and physics. And honestly, the physics of space simply do not favor traditional business models at all.
How so? Like, break that down for us.
Well, when we talk about satellite internet, there are basically two main types you need to know about. You have geostationary satellites, and those sit roughly 22,000 miles out in space.
Okay, so way out there.
Way out. And they cover a huge portion of the Earth from up there, but because the signal has to travel so far, the lag time or the latency, it just makes modern internet usage almost impossible. You can't run a video call with a 2-second delay.
Right, nobody wants that.
Exactly. So to get low latency, you need low Earth orbit or LEO satellites, and these sit just a few hundred miles above our heads.
Which is much closer.
Much closer, yeah. But because they're so close to the Earth, their field of vision is tiny. So that means you need to launch dozens or even hundreds of them just to ensure continuous global coverage.
So the cost just skyrockets.
Exactly. The capital expenditures required to maintain a LEO constellation are just catastrophic for a standalone company.
Right, which brings us to the massive structural shift that happened in late 2024. Because Globalstar essentially, well, they found a cheat code to bypass that traditional debt-heavy grind.
They really did. It was brilliant.
They entered into this landmark strategic partnership with Apple, and Apple just straight up injected $1.5 billion into Globalstar.
A massive lifeline.
Huge.
Yeah.
It was $400 million for a 20% equity stake, and then another $1.1 billion in prepaid infrastructure commitments. So Apple just walked in and completely restructured Globalstar's balance sheet literally overnight.
Yeah, allowing them to expand without diluting their existing shareholders or, taking on that toxic debt we just talked about.
But of course, there's always a catch, right?
Oh, a massive catch. It was a masterstroke of corporate survival for Globalstar, but it came with an ironclad caveat. In exchange for that capital injection, Apple contractually reserved 85% of Globalstar's entire network capacity.
85%. That is wild.
Yeah, they completely fenced it off to power the emergency SOS and two-way satellite messaging features on the iPhone.
Okay, so if I'm listening to this, I'm probably thinking, wait a minute. Apple and Amazon are trillion-dollar companies. Surely they can share. Why on earth does sending a tiny text-based SOS message require hoarding 85% of an entire global satellite network's capacity? I mean, that seems completely disproportionate.
It sounds crazy, right? But it actually comes down to the physical limitations of the hardware in your pocket.
Okay.
A traditional satellite phone has this massive, thick antenna that's designed specifically to punch a signal through the atmosphere, but an iPhone does not.
Right. It's sleek. It's got a tiny little internal antenna.
Exactly. And that tiny antenna is constantly competing with atmospheric noise, weather, and just the user's physical surroundings. So for a satellite sitting hundreds of miles in space to successfully hear a faint SOS ping from, say, a stranded hiker holding a standard smartphone.
It's got to be incredibly difficult.
It is. The satellite has to dedicate an enormous amount of its processing power and frequency bandwidth simply to listen for that specific tiny frequency. So Apple is basically paying to ensure that when a user presses that SOS button, the network is entirely cleared out. It prioritizes that life-saving data packet over literally everything else.
Oh, wow. Okay, so it's like a city completely shutting down an 8-lane highway just so a single ambulance can drive at top speed without ever having to tap the brakes.
That is the perfect analogy, yes.
Apple essentially bought the entire highway to ensure zero traffic for their users. And, I mean, it creates an incredible, highly visible, recurring revenue baseline for Globalstar.
Yeah.
It fundamentally de-risks the business.
Right. It transforms Globalstar from this, speculative telecom company into a de facto infrastructure utility. They simply service the largest consumer hardware company on the planet.
But, and this is the big but, that introduces a massive contradiction to the news today. If 85% of this company's operational bandwidth is already legally locked down by Apple, what exactly is Amazon rumored to be buying for $9 billion?
That is the $9 billion question. And the answer is Amazon is not buying the active satellites currently orbiting the Earth. And they certainly aren't paying $9 billion for the leftover 15% of network capacity.
Right, that wouldn't make any sense.
Not at all. What they're buying is regulatory and spectrum asset scarcity. Globalstar holds prime, globally recognized spectrum rights for low Earth orbit.
Okay, wait, I have to stop you there, though. Because Amazon is sitting on tens of billions of dollars in cash, why don't they just, hire 1,000 top-tier aerospace engineers, build their own hardware, and secure their own spectrum? Why do they actually need Globalstar?
Because you cannot engineer your way out of global physics, and you cannot bribe the space-time continuum.
Fair enough.
Low Earth orbit spectrum is a strictly finite physical resource. These are essentially invisible, highly regulated highways in space where data can travel without causing catastrophic signal interference, and securing the rights to broadcast on those specific frequencies. That requires years of diplomatic negotiations with the International Telecommunication Union and just relentless regulatory grinding with the Federal Communications Commission.
So you aren't buying the cars, you're buying the exclusive zoning permits to operate the highway itself.
Precisely.
And this ties directly into Amazon's current crisis, because we've got these April 2026 reports that Amazon is in advanced negotiations to acquire Globalstar. And this is all about Amazon's own satellite internet project, right? Amazon LEO, which used to be called Project Kuiper.
Yes. They are in a desperate existential race against SpaceX's Starlink.
And Amazon is, well, they're terrified of losing the enterprise cloud market to Elon Musk, right?
Absolutely terrified. Because Amazon Web Services, AWS, is the absolute profit engine of Amazon. If a remote mining operation in Australia or, say, a global shipping fleet needs cloud computing, they cannot run fiber optic cables out there. They need satellite internet.
Right, and Starlink is already doing that.
Exactly. Starlink is operational, they are generating revenue, and they're actively capturing that enterprise market share right now as we speak. Meanwhile, Amazon is staring down massive FCC regulatory deadlines.
Right, because the FCC doesn't just hand out spectrum rights in perpetuity. They operate on a very strict use it or lose it mandate, don't they?
Yeah, think of it like a city council granting a developer a permit for a prime piece of downtown real estate.
Yeah.
The city wants a skyscraper there to generate tax revenue. If the developer doesn't pour concrete within a few years, the city revokes the permit and gives it to someone who will actually build.
Makes total sense.
The FCC operates the exact same way in space. If Amazon does not have a specific percentage of their satellite constellation operational by their mandated deadlines, they lose their orbital licenses entirely.
Wow. So Amazon is essentially out of time.
Completely out of time.
They are in this phase where they basically have to trade capital for time, because missing those deadlines means their entire multi-billion-dollar space internet ambition completely evaporates. Acquiring Globalstar just offers an immediate, ready-made shortcut to keep Amazon LEO viable.
It is the ultimate scarcity premium. You really cannot value Globalstar today based on a traditional price-to-earnings multiple or historical book value. That goes out the window.
Right. Standard metrics just don't apply here.
Exactly. The market is assigning a massive $9 billion premium because Globalstar is quite literally the only feasible shortcut left on the board. For a hyperscale company like Amazon, $9 billion to prevent the failure of a multi-decade infrastructure initiative. That is a completely justifiable strategic expense.
And the market clearly agrees with that logic,
Yeah.
because the price action has just been violent. When these acquisition reports dropped, we saw a massive gap up. Globalstar shares surged over 24% in early trading, and they violently broke out to an 18-year high.
Yeah, and that 18-year high is not just a fun trivia fact, It fundamentally changes the entire psychology of the stock.
Oh, 100%.
When a stock trades below a certain level for nearly 2 decades, you create generations of what the market calls bag holders.
Oh, man. The worst place to be.
Right. These are investors who bought the stock in like 2008 or 2010 at much higher prices, watched it crash, and have basically spent the last 15 years praying to just break even.
Yep. So every single time the stock rallies slightly, those people sell to get their money back.
Yeah.
And it just creates this concrete ceiling of overhead resistance.
Exactly. But what we just witnessed was the stock decisively chewing through all of that historical selling pressure.
And when you clear out the last of those trapped investors, the stock basically enters blue sky territory, right?
Right.
Because there is zero historical price memory above these levels to act as resistance.
Right. So the price discovery moving forward is driven purely by the mechanics of the M&A arbitrage. It's completely detached from anything the stock did over the last decade.
And if we look closely at the institutional filings, I mean, this is where the plot really thickens for me. Highly sophisticated hedge funds, Soros Fund Management, AQR Capital Management, Millennia Management, they built massive positions in this stock before the 18-year high breakout.
Yes, they did.
They were accumulating shares before the public frenzy even started. So do you look at that and assume the smart money practically guarantees this deal is happening? Are they just front-running a sure thing?
Okay, that is honestly the most dangerous assumption an investor can make when looking at M&A arbitrage.
Really? Why is that?
Well, institutional positioning is a strong bullish signal that deep value was identified early, sure, but it absolutely does not guarantee the deal closes. Merger arbitrage is a purely mathematical exercise in probability.
Okay, let's bring down those mechanics then.
Sure, so if the rumored acquisition price is $9 billion, but the stock is currently trading at a market capitalization of, say, $6 billion,
Yeah.
that $3 billion gap is the arbitrage spread. That spread represents the market's exact pricing of the risk that the deal falls apart. Institutions are buying at $6 billion to capture that upside, betting that the probability of success is higher than the market is pricing in. But every penny of movement right now is tied directly to the probability of Amazon actually crossing the finish line.
And we are also seeing a massive sector rotation based on this news, too. I mean, other space telecom peers like Viasat and AST SpaceMobile are suddenly trading significantly higher. It's like this massive rising tide effect.
Yeah, and when a rising tide lifts all boats in a niche sector like this, it means the entire industry's asset base is being rapidly repriced.
Makes sense.
Institutions look at the Globalstar rumor and realize, hey, if LEO spectrum is suddenly worth $9 billion to Amazon, then the spectrum held by Viasat or AST SpaceMobile has been massively underpriced by the broader market. It validates the underlying value of space infrastructure entirely.
But let's bring this back to the core arbitrage play, because we have to talk about the friction point.
Yes, the roadblock.
Right, because just as this starts to look like a guaranteed home run, there is a massive legal roadblock sitting right in the middle of this intersection. And it goes right back to that 2024 deal, the Apple defense.
Yeah, this is the single biggest risk factor for anyone holding this stock today. Because Apple holds a 20% equity stake, and because they hold a contract locking up 85% of the network capacity, Apple holds absolute veto power over any change in corporate control.
So Apple is essentially sitting in the passenger seat with their hand resting firmly on the emergency brake.
Very firmly, yeah.
If Amazon wants to drive this vehicle to challenge Starlink, they're going to have to pay Apple off first.
Exactly, and the physics of bandwidth make this incredibly complicated. We already established that bandwidth in space is a zero-sum game.
Right.
Amazon wants to use this network to push heavy enterprise cloud data for AWS. Apple wants the network completely clear to listen for faint, life-saving emergency text messages. You cannot do both on the same frequency simultaneously without degrading the signal.
Right, they inherently conflict.
So Amazon cannot utilize the spectrum they are buying unless they break or alter Apple's contract.
And Apple has absolutely zero incentive to make life easy for Amazon.
Okay.
I mean, they are direct mega cap competitors. Why on earth Would Apple voluntarily surrender their emergency infrastructure just to help Amazon build out a rival cloud network?
They wouldn't. Simple as that. Apple will either block the acquisition outright or they will demand absolutely exorbitant financial concessions from Amazon to amend that capacity agreement.
So Amazon is going to have to write a very, very large check to Apple to make this problem go away.
Huge check, yeah.
So if I am an investor holding this stock, what happens if Apple just says no? What if they demand too much, negotiations deadlock, and Amazon simply walks away?
Well, if the deal collapses, the arbitrage spread violently collapses with it. That entire scarcity premium vanishes overnight.
Wow.
The stock would experience a brutal, immediate correction because it would instantly revert to being valued on its standalone fundamentals.
And those are better now, but still.
Right, yes, those fundamentals are healthier today thanks to Apple's cash, but Globalstar would still be left holding the bag, trying to execute incredibly capital-intensive satellite deployments without Amazon's deep pockets. The downside risk in an arbitrage failure is just as violent as the upside breakout.
So mapping this out, if you are out there tracking this trade, you need a highly specific catalyst calendar for the next 3 to 6 months. First, you are watching for a formal M&A announcement. The reports state they are in advanced negotiations, which implies a definitive agreement or, a total public breakdown could materialize within weeks.
Absolutely. And second, you must aggressively monitor the regulatory filings. You've got to look for any FCC submissions regarding spectrum transfer.
Right, because that bureaucratic paper trail is public.
Exactly. If you see filings requesting the transfer of orbital licenses, that is your leading indicator that the deal is quietly progressing through the regulatory hurdles even before a press release hits the wire.
And third, the ultimate trigger here. You have to look for any news regarding an Apple contract amendment. Because if a headline crosses the terminal that Apple has agreed to alter their 85% capacity reservation, that is the starting gun.
Yep, that signifies the primary roadblock has been legally cleared.
The entire valuation of this company currently balances on those 3 pillars over the next 90 days.
It really does.
So pulling all of this together to synthesize the final investment thesis, the implications here are just profound. Taking everything into account, the underlying spectrum value, the massive institutional accumulation, and the strategic desperation from Amazon, where does this actually land?
Well, factoring in the technical breakout and the fundamental scarcity of the asset, this situation earns an 8.5 out of 10 bullish score.
Okay, pretty high.
It is, however, that score comes with a mandatory caveat. This must be viewed strictly as a tactical, event-driven trade. This is pure M&A arbitrage.
So don't just buy and hold forever.
Exactly. This is not a scenario where you buy the stock, throw it in a retirement portfolio, and ignore it for 10 years based on organic growth metrics. You are making a highly calculated binary bet on the completion of the Amazon acquisition.
Because success fully validates that $9 billion price target, but failure means a heavy, immediate drop back to the historical baseline. You just have to monitor the Apple negotiation dynamic relentlessly.
It's a high-wire act, but the underlying logic driving the valuation premium is sound. It is a perfect reflection of the ruthless economics of the modern space industry.
It really is. And I want to leave you with one final thought to mull over as you watch this exact scenario play out. We've spent this entire time dissecting Amazon's frantic, desperate push to buy Globalstar. If Amazon is willing to shell out $9 billion, dealing with all of this Apple friction, the legal headaches, and the regulatory nightmares, just to secure a rudimentary shortcut so they can even begin to step into the ring and challenge SpaceX, what does that imply about the underlying hidden valuation of Elon Musk's Starlink network right now?